In this video, I'm bringing an update on Donald Trump ending the dominance of the credit bureaus and FICO scores. And now the Trump administration is alleging that FICO and the credit bureaus are secretly attacking his administration, but they are going to stand on business going at the FICO scores and the credit bureaus.
Credit score bureau FICO in the hot seat lately after Bill Pulte, the director of the Federal Housing Finance Agency, took aim at the company in a barrage of posts on social media, saying in one, quote, FICO and other monopoly who has ripped off Americans for decades should not be using improper efforts to threaten regulators. The company's stock is down more than 20% so far this year.
Now, FICO and the credit bureaus are claiming they're the ones being targeted. And let me know your opinion. Do you think that they're unjustly being targeted by the Trump administration, or do FICO and the credit bureaus actually deserve this scrutiny that they're getting? Because in this video, I'm going to break down what is going on and why this beef between the Trump administration and FICO and the credit bureaus is long-standing since his first administration of 2018. And what are they doing? Trying to retaliate against the Trump administration, and why this is all good for me and you. If you have good FICO scores, you already see that they're still denying people actively right now for credit, and it has nothing to do with your score. And we're going to break down why all of these things are happening in this video. Now, if you're new to this channel is designed to help you no matter where you are in your credit journey. And if you like that kind of information, make sure you subscribe to this channel, give this video a thumbs up. And if you go to my website, you can download this free hard inquiry removal package. I'll leave the link in the description of the video and in the pinned comment section. Now, to bring you guys up to speed, many in the Trump administration has been going at the credit bureaus and FICO. Now, one of them is Senator Josh Hawley, and here's his statement, and he's calling for an investigation on the credit bureaus and FICO.
Senator Josh Hawley wanted more accountability in the financial services industry. Now, in his second Senate term, he's again taking aim at the Fair Isaac Corporation, or FICO.
These are the credit score people.
Hawley told the DOJ FICO enjoys a sweetheart deal from the federal government wherein its credit scores are required for loans originated with multiple government entities. Hawley says FICO has abused its government-granted market power.
Now, the senator is calling for an investigation into FICO because he's saying with the government's green light by having them majority for mortgages and them backing them, they have now created a monopoly on the credit score system. And he's calling for them to be investigated because he feels like they're blocking a lot of the American people out of the financial system. And he's not the only one with the Trump administration. Bill Pulte is another person in the Trump administration and cabinet that's also going at the credit bureaus along with FICO.
Well, Scott, it was just a little under an hour ago that FHFA Director Bill Pulte posted on X that he was going to do a comprehensive review of the credit bureaus. And that, of course, sent the stocks of the bureaus like TransUnion, Equifax, Experian tanking. I reached out to Bill Pulte, who, by the way, FHFA is housing. That's the Federal Housing Finance Authority. But he told me in following President Trump's executive orders to lower housing costs and consistent with the law, we are ensuring there is a truly competitive market with credit bureaus. This includes not just the price, but also we want to ensure that the bureaus are acting as true competitors of each other, which was interesting. Then he followed up and said, oh, one more thing. I'd encourage the companies to operate above board and not engage in any improper collusion as we seek to help the American consumer. That was a little bit more of a shot across the bow.
So the collusion that he's speaking of is the credit bureaus working with FICO. So think about it like this. You have vehicles and car makers. So imagine if the U.S. government only bought for Ford Motor Company all their cars. And that's the cars that they only use. And for any government funding you needed with your local police, if they were getting funds to buy vehicles for their municipalities, they must only buy Ford. Well, that's going to knock out GM, Chrysler, and other car companies to not be allowed in the game. And it's going to give more of a reputation for Ford Motor Company as a more solid vehicle because of the backing of the federal government. It's the same thing with FICO. There's other scoring models out there that can be used. So you have Vantage scores, And so now what they're saying that FICO is demanding whatever price they want, and they're charging everybody. They have a sweetheart deal, all because of the federal government backing them. And they're even charging the federal government a higher price without even trying to negotiate on their contract. And to make it worse, they're knocking out a lot of people from actually getting lending because they're setting the terms. We're seeing a lot of people right now with really good credit scores being denied for credit.
The company's stock is down more than 20% so far this year. FICO CEO William Lansing joins us exclusively now. Your stock. First, he started attacking you on social media and then started making moves to allow for more competition. From your perspective, how did all this come about?
Well, I think the director is known as a man who moves quickly and likes to make decisions, and not at all surprising that he's trying to get something implemented because it's been a multi-year process. So that's not at all surprising. The so-called interim solution is full of issues, though. It's a fairly radical departure from the prior nation of the GSEs. Imagine that the FHFA will eventually have industry input to try to understand the implications.
Now, one of the parts why Bill Pulte is accusing them for retaliating against him and the Trump administration is because back in 2018, Trump and his administration passed a law to allow more competition when it comes into scoring models and even some AI models. Trump in his first term created the Credit Score Competition Act that seeks to modernize and expand credit access by encouraging the use of advanced and inclusive scoring models within the mortgage market. Now, the act was included in Section 310 of the broader Economic Growth and Regulation Relief and Consumer Protection Act, signed into law on May 24th, 2018. Now, this would expand access to credit. The act aimed to address limitations of the classic FICO scoring model, which excluded or disadvantaged borrowers within thin credit files or limit access to traditional forms of credit. This disproportionately affect minorities and first-time homebuyers. Considering alternative data, the newer credit scoring models validated under the act can incorporate a broader range of data, including rent, utility, telecom bills, which were often excluded from older models. This expands the criteria to use to assess creditworthiness and potentially increase home ownership opportunities for many Americans. This policy shift stands to benefit up to $1 trillion in additional mortgage activity, billions of creditworthy Americans, including veterans, young borrowers, and those in rural areas, especially those without traditional credit history. So here is the reply from the FICO CEO.
His basic claim is that you're a monopoly. Is that true?
Well, we have large market share. That's true. And in almost all places where we sell scores, there's no mandate from the government. It's strictly, it's a free market and people choose our score. Why do they choose our score? Why is our score the industry standard? It's because the score is great value and it does a great job of predicting the likelihood that a consumer will repay the debt. There is a lot of advantage from an efficiency standpoint to have an industry standard, to have a single score. As soon as you get into duplicate scores, you have to do duplicate modeling across the entire industry. And it's a very complicated industry, obviously, running from mortgage originators and brokers through lenders to the GSEs to ultimately the mortgage-backed securities investors. And so, having multiple scores knocking around in a system like that is not very efficient.
Now, with FICO scoring model, they actually dominate the industry. Even with the credit bureaus, you have Experian, TransUnion, and Equifax, which they are each other competition. But with the FICO scoring model, they're the only one that dominates. So it's like only Apple phones are used. You don't have Androids. They just dominate the market and no one else can use anything else. So they get to dictate the price.
So on the competition story now, Vantage Score 4.0, I guess, which is your competitor, mortgage lenders can use that to originate loans backed by Fannie and Freddie. How big of a deal is that for your business?
Well, to be determined. Vantage 4.0, which is what they're talking about, is not apples to apples with FICO Classic. FICO Classic used today is a 20-year-old score, and it's roughly comparable to Vantage 4.0. FICO's latest and greatest score is FICO 10T. That's the score that was approved by the FHFA and has not yet been implemented, but it was approved. And it is the most predictive score. I think that the GSE data and analysis would show that. We have a white paper on our website that explains the differences, but it's far more predictive. It's likely to result in 18% fewer credit defaults, and probably score as many as 5% more people. So not score, but qualify as many as 5% more people. So
now, as you can see, of course, that is bad for FICO and the credit bureaus if they're using alternatives. And this is why they're very upset, and where the Trump administration is feeling threatened, because now they're actually attacking them with their own lobbying groups to try to get those that support the bill and these new changes up out of office.
Well, that's what I was going to ask. If you have a view on whether it makes the system less safe or more unsafe, if there are others in there that you claim don't do as good of work as you or as stringent of a process as you do when it comes to evaluating credit.
That's exactly the problem with lender choice, the so-called interim solution, because ultimately, in half the market, the conforming market, the risk is borne by Fannie and Freddie and ultimately the U.S. taxpayer. And if you have two scores and lenders can choose, or consumers can choose, market participants can choose between two scores, you're going to have a race to the bottom. And we learned a lot in 2008, and I would hope that we wouldn't repeat it. If you create an incentive for shopping around to get the most lax score, you're going to get shopping around for the most lax score, and you're going to wind up with real safety and soundness threats to the system. And it's even deeper than that. The policy issue is that it encourages score providers to lower their credit standards. In a race to the bottom, you have score providers competing with each other on who can be more lax and score and qualify more people. And that's not something that's going to make the MBS market happy, and it's not going to make the U.S. taxpayer happy. And so there, the real challenges with that.
Now, recently these changes was implemented by the Trump administration for mortgages, especially when it goes for FHA loans and different government loans like VA loans and things like that. So when it came down to a lot of people currently, when it comes to FICO scores, they really go against you if you have a certain amount of debt reporting on your credit report. Now, you can be making on-time payments and you can have really good credit scores, but they're disqualifying people from homes because of debt. And a lot of this debt came from the inflation from the COVID-19 pandemic. And so is it fair now that you're penalizing people, not allowing them to get a home, all because of that? And now they're crying foul with the credit bureaus and the FICO scores, because with the Trump administration, they are now using a fintech company, which is called Cactus. And they look at different ways just outside of credit scores to see if you can afford a home, even outside of your debt, and different factors that make people qualify for more mortgages. Now, why is this important? It is important because in order to kickstart this economy and to give the Trump administration a better look, especially for jobs and for the economy altogether, lending must take place. In order for you to buy, you must be able to borrow. In order for business to stay in place and vibrant, most businesses need to borrow and leverage debt and turn around and sell that to consumers. But if you have a tie-up in the system, then neither side can get access to funding. Now, the other part is why Trump is complaining about the interest rates with the Fed. In order to make mortgages more affordable, you need to bring down the interest rates. And now with these homes being over, on average across the country, $400,000, and with high interest rates almost at 7%, people cannot afford a mortgage. Now, in order to buy a home, you in cash would have to save $400,000. And if they start printing again, guess what? It's going to get higher, because it's not the cost of everything going up. It's actually your purchasing power of your dollar going down. So it's best for you to borrow instead of trying to work for this currency at this time. Now, with my elite credit system, users like Sean was able to go from a 612 credit score with all his credit scores over 770 in a matter of 6 months. And now he's at an 803 credit score and was able to get business credit. And if you need my help with my AI software and coaching, the link is in the description of the video and in the pinned comment section. But now you do not want to work for this cash. You rather borrow, because it's easier to borrow $50,000 than to work and save for it at this moment in time. And that is not good for the economy. So they want to kickstart the economy, because understand, the United States been enjoying the dominance of the American dollar ever since World War II, because when that took place with Hitler, with the rest of the world, most of those European countries sent their gold to the United States to protect it, because the United States were on the gold standard with their dollar. So then we became the world currency. This is why now the United States hold a huge amount of gold in Fort Knox. Because of the Atlantic Ocean, the United States is pretty much safe from the rest of the world. But now with technology getting a little more advanced, not as much. So when the United States had the gold, then you start to see the FDR begin to roll back off of the gold standard, and Nixon took us off completely. And so now the United States, with all of the world currencies, is nothing but a fiat system. It is backed by nothing, this dollar. It is a medium of exchange. You used to can exchange this dollar for its value in gold or silver when you went to the bank. And now, because it's backed by nothing, you see inflation when they put more dollars in the money system with stimulus, also lowering interest rates. The rest of us felt the feel of the inflation, and many of us had to go into credit card debt just to survive, because the prices of everything was going up except for your paycheck. And in order for when they double that money supply and for you to stay pace with inflation, your wage would have to double. So if you made $20 an hour, when they doubled the money supply, you're really now only making $10 an hour, because everything around you went up. A bottle of water that was $1 now costs you $2. This is why I personally trade out my US dollar for silver and gold, because this is nothing but credit. People don't understand the dollar is backed by nothing but people's faith in the United States. And the US dollar is being challenged. So I trade out the dollar for gold and silver every month. Silver and gold is God's money. If you want to do that, you can sign up for Quicksilver, where they can send you your amount of gold and silver for whatever you program. And it's best to save your money that way, because maybe not all of your money is being saved in silver and gold, but understand they're robbing you of your most valuable asset, is your time. If you're working for dollars and you save $1 million, and then they start to print, putting more money in the system, then they double the money supply. And so your purchasing power of that $1 million that you saved get cut in half to 500,000. So that's all you can buy. And they slowly erode you of your economic effort. And so this is why this is very important to the Trump administration. And, you know, Republicans most of the times hate regulations. They want more free market. Now, this can be good and bad, but in this situation, it's actually better for the American people if we have other options in order to get access to funding. So hopefully this information was helpful. If you have any questions or comments, leave it in the comment section. But if you need more detailed questions from me, you can go to my website, and all your questions go directly to my cell phone. I hope to see you guys in the next video. Stay tuned.